AI spending fears, tanker attacks in the Middle East, uncertainty about interest rates, more drama than a World Cup final. Join us for our latest market update. Hello and you're very welcome to our July market update. So much to talk to you about. We all saw those scenes where the Spanish lifted that golden trophy in the World Cup final. You know, when you think about gold, it certainly has been a feature in many of our updates so far this year, and we'll be talking about that certainly today. And definitely it has lost some of its shine during the summer months. So July has definitely been a very volatile month. Lots of ups and downs along the way, not just for the stock markets, but also for the bond markets. Let's look a little bit behind some of the key stories that we saw. In the early part of this year, it's been all about artificial intelligence, and we've had companies doing spectacularly well on the back of that. We saw some really sharp sell-offs. So the biggest winners so far this year were very much the biggest losers during the month of July. We had companies like Micron and SanDisk losing well over 40% of their value in 1 month alone, having risen really well all the way through the early part of the year. What are markets worried about? They're worried about overspending. Capital expenditure. Are they swallowing up all of their cash resources to try and expand too quickly? And are there signs that are they overvalued, and will some of that spending be recouped in terms of earnings at some point into the future? We also saw re-emergence of geopolitical tensions. So this is the dispute in the Middle East in particular, but also the ongoing conflict between Russia and Ukraine as well. And all of that led to higher oil prices, which made markets worried about higher inflation, and higher inflation tends to lead to higher interest rates. And higher interest rates are bad news for the bond market, a key part of the investment universe as well. And we saw bond yields, which is a measure of prices, have been rising right throughout the month of July, and this is not something that's welcomed by the investment universe. We've also seen some parts of the investment world have been doing quite well. The UK market had a good July on the back of the higher oil prices because they have a lot of energy stocks on their market. Banking stocks will have done well also. The Korean stock market is one we've mentioned a few times. It's called the Kospi. Two companies make up a large part of it, SK Hynix and Samsung. Again, incredible results so far this year. And on consecutive days, we've seen double-digit increases and sell-offs in their share prices. So there's no doubt about it at the moment. We're seeing winners and losers in the investment world. We're also focusing on the earnings season. This is where halfway through the year, we get the school reports start to come out, and we've seen very, very mixed news. What the markets seem to like is that quite a lot of companies have been beating analysts' expectations. What they don't like is when they're hearing about expectations of big increases in capital expenditure. We've seen the Magnificent Seven have been reporting very, very mixed results. We've had the likes of Apple absolutely wowing the markets with their returns, but Meta, also known as Facebook, seeing very sharp sell-off on the back of less positive results and also expectations of big spending and capital expenditure into the future. So mixed story out there at the moment. If you look at other parts of the investment world, such as investing in commodities, we have seen oil rising very strongly on the back of the conflict in the Middle East, touching on $100 a barrel. And gold, that I mentioned earlier on, normally does quite well when you're starting to see conflict around the world, but with expectations that interest rates might start to edge a little bit higher, we have seen the gold price has sold off a little bit as well. So a little bit of the shine gone off gold. So where do people go for their money in an environment like this? It really has to be all about that more diversified portfolio at the moment, and being very careful about what's particularly areas like the bond market, where there's quite a lot of uncertainty about the direction for interest rates, particularly out of the United States, how well they're going to control inflation, how are companies going to perform in the second half of the year, having had a very, very good first half of 2026. So key lesson, I would say, taking all of this into consideration at the moment. Economic growth still remains. There are a lot of parts of the market maybe a little overvalued at the moment, and there's no doubt that the markets are a little unnerved about the expectations around artificial intelligence at the moment. Key lesson is make sure you're very, very well diversified in this environment. Please come and talk to us if you want advice about how to get the best possible returns that suit your needs in an environment like this. Look forward to speaking to you again.